The truth about bear markets, sometimes bear markets will be your best friend, and sometimes bear markets will become your worst enemy. And that has to do with time horizon, and that's what this video is all about. Let's get into it. And we're back. If we haven't met yet, my name is Mitch Goldberg. I'm a financial advisor and business owner. This YouTube channel is about financial education. So there are times when a bear market is your worst enemy, and a bear market could also be, at times, your best friend. So let's talk about that, because that has to do with time horizon, and time horizon has to do with how aggressive or conservative you could be with your investments. So there are three main financial goals that I help clients with. There are many financial goals, but the three most popular ones are saving for a down payment to buy your first home, saving and investing for your child's or children's education, and the last one, the universal goal, is retirement. So they all have something in common, because you have a start date when you start investing, and you have an end date when you reach the goal. The first major goal is saving for a down payment. Now imagine if you've put some money aside, you've put money in your savings account, your checking account, you've invested some money outside of a 401k plan, because presumably your 401k plan is going to stay where it is. You're not going to use that money to put toward a down payment for your first home. So it takes a lot, and I understand this. My wife and I, a long time ago, we bought our first home as well. It takes time, you have to sacrifice, you have to save, put away money. So you finally get to that point. Imagine how you'd feel if the money you had in the market was still in the market right before you're about to write your check for your down payment. And then we go into a bear market like 2007 to 2009, when the markets went down, the major averages went down 50% or more. How would that affect your ability to purchase the home you want? Okay, that would probably have a very bad effect, a very negative effect, and you would be kicking yourself for not taking that money out of the market. So my advice to clients who are going through that is to have your stock money out of the market and into cash equivalents like CDs, money markets, savings accounts, checking accounts. That's where your down payment should be, well in advance of the time you even decide to purchase your first home. So popular goal number 2 is saving for your child's college education. So here's a scenario. You have a baby, wonderful time of life, and you decide to open up a 529 plan, or also known as a college savings plan, for your new baby. And if we have a bear market and stocks go down, and you keep investing month in, month out, the same dollar amount, it means you're going to be buying more shares for a lower price of the mutual funds in the 529 plan. And that is a great thing. Good for you, good for the child, because that means when the market does recover, your money will grow that much quicker. And if you think of it this way, if the child is 9th, 10th, 11th grade, that means you're thinking about college for your child, the goal is getting very close, and believe me, your child is probably thinking about college very much too. At that point, 9th, 10th grade, you really want to be ratcheting down the stock risk, the stock exposure, and upping your exposure to money markets and fixed income funds. Why? Because if you have a severe bear market and you're fully invested in stock funds in the 529 plan, we have another 2007 to 2009 style bear market, conceivably you could lose 50% or more of the assets in that account. How would you feel about that? And that would really, take away the money that you had for college. So you want to avoid that, because like I said earlier, it's your time horizon that dictates your risk tolerance. So you have less time to reaching the goal, you have to take less risk. Goal number 3, it's the universal goal, it's retirement. Everyone's saving for retirement, or at least everybody should be saving for retirement. So if you're 20, 30, 40 years away from your retirement, maybe even more, lifespans are longer, people are living longer. So if you're 22, it's quite conceivable that, again, if you're 22 today, that your retirement date might not come until, you're 72 or later. Okay, it also depends on how well you did in preparing for retirement. So the less preparation you do when you're young, it means the longer you're probably going to have to work when you're older. But having said that, if you're young, And that's debatable what age is young, but if you've got 30, 40, 50, 20 years, even 15 years away from retirement, you could afford to be more aggressive with your investments, especially if you're 30 or 40 years away from retirement. And you want a bear market. Quite frankly, a bear market is your friend. That means you're buying more shares in your 401k plan of the same mutual funds at lower prices, so when you do ride the market back up, you'll really see your assets grow. Now, of course, if you're, let's say 10, 15 years away from retirement, you might not be fully invested in stocks, but maybe you'll be 60% stocks, 40% bonds, thereabouts, depending on your individual risk profile. And maybe when you're 5 years, 10 years away from retirement or even closer, you're going to really start to ratchet up the fixed income and money market exposure and reduce the stock exposure. It's different for everybody, and I'm not saying you should be fully in cash when you hit that retirement ramp, because you could still conceivably have 20 or 30 years to live after that. So you still need assets in the market to continue to grow in order to potentially stay ahead of inflation and make sure to help you potentially have more money for your later years in retirement. I hope this video helped you out with your understanding of investment time horizon. If it did, please give it a thumbs up and subscribe to my YouTube channel. If you're in the market for a new financial advisor, my contact information can be found at ClientFirstStrategy.com. Give me a call, let's talk about it, and we'll see if we're a good fit. Thank you so much for watching, and until next time, I'll see you soon.